Welcome back, and you're watching Commodity Champions, and let's quickly recap the week that was for commodities. Starting with the metals, and they have seen a wild ride this year. You have seen steel gain up by 23% in this year already. Zinc, aluminum, copper, you name the metal, and all of them are closing the week on a positive note. The year as well. So the month of January and February have been quite positive for all of those metals. The rally, of course, has been led by the China PMI data, which was the best in 3 months. The China output concerns as well because of the environment regulations and expectations of increased infra spending coming in from US. All of those factors have been supportive. And then, of course, there have been those mine shutdowns, not just from Chile, but from Indonesia and Philippines as well. And that has been supportive for that space. Joining us now is Bernard Dada, who's precious metal analyst at Natixis, and he joins us live in London as well. Bernard, hi, good to have you. It has been quite a roller coaster week, as we've seen, for the metals of all kinds, precious as well as base metals as well. But what is your sense? I mean, what are the fundamentals that you would want to watch, especially when it comes to the macros?
Yeah, I think the most interesting we're going to be watching for the next 2 days is going to be Janet Yellen's statement, or the Fed statement later today, or at 1 p.m. New York time. I think this is going to be a big moment in a sense that we're expecting that there's going to be the market, and so are we, are expecting that there's going to be a Fed rate hike in March. I think that can be quite negative for gold. We've already seen the price of gold drop. So the other thing also I would look at is later on is trying to listen more to what Trump's economic policy is going to be. He briefly touched it in Congress. He only mentioned the $1 trillion. But the big question is it actually going to be $1 trillion? Because that could potentially have a big benefit for base metals, which has, in a way, already factored in $1 trillion investment infrastructure boost.
So, Bernard, what is your sense then? Because the kind of rally that we have seen, while the fundamentals, of course, have been positive, it really has been a lot of fund money moving in for many of these commodities as well, which has been holding longs and even record highs for many of those metals. Really, do you see them staying overweight? Is that how you see the next quarter coming in as well?
Yeah, it's a tough one, because I think the fund money and the investor money is there, and this is probably the money that's been propping up base metals and precious metals. Because if we look at demand from Asia, fundamental demand from the construction sector in Asia, especially in China, it hasn't been proportionately as strong as the rally has been. And even in terms of gold, for instance, import into China haven't been very strong. So it's clearly some sort of investor bet when it comes to base metals that the infrastructure spending is going to be $1 trillion. And I think when Trump pre-mentioned it in Congress, I think that's how also base metals received the boost. But just as quickly as investors enter the market, they can very quickly exit the market. So in a way that makes base metals, it puts it in a very tricky situation. And finally, also, I think the stock market in the US is hitting record highs. And I think that, if it ends up being, if it does end up being kind of a bubble and there's some disappointment and the Dow drops sharply, then we could see gold in a way benefiting and base metals maybe suffering a bit more.
So, Bernard, what would you be your top pick going forward for an investor who wants a slightly a longer term horizon, really?
I would be more bullish on base metals. I think that infrastructure spending one way or another will happen. If not this year that we hear, I think into next year and the year after. I would be slightly more concerned about precious metals, gold and silver, given the fact that it seems that the Fed might accelerate its Fed fund rate hike.
All right,
Palladium as a metal, I think, could benefit from the
All right, Bernard, we'll let you go at that. Thank you so much for joining us. So that's the view really coming in from Bernard Dada of Natixis, that base metals is a space that he thinks is going to be more bullish, and precious metals could come under some pressure given the fact that the Fed may accelerate interest rate hikes as we get more into 2017. But also joining us now is Hong Mai Lee, who's Senior Editor, Metal and Steel News at S&P Global Platts. Hong Mai, hi, good to have you. How do you look at the metal space? Because the kind of a correction that we have seen on the last day of the week, do you see it deepening?
Okay, the thing is, what I want to say for the metals as well for the steel is both in late February as well as early March, the first day of the March, we can see the prices surge. But I think the surge is actually more to responding to the positive news, both from the US and China, especially about the infrastructure construction. But when the market chills down and realize that whatever expectation you have to wait for all this kind of new measures to kick in order to see the concrete demand coming up for the metals and the steel. So that's why I believe, as you mentioned just now, for the past 24 hours, we see some correction. Yeah, but in the midterm and the long term, I still feel that the outlook is pretty strong.
So how much of a decline do you see before we can start buying again? I mean, as you pointed out, the fundamentals are strong. So how much of a decline before you start putting money back?
That's a good question. For the time being, China is going through these two top political meetings. At least from China, we'll be able to see some news regarding its economic growth for this year. And then whereas for the U.S., very shortly we'll be able to know whether the Federal Reserve will be increase the interest rate. If it decides to do so, then it will be positive news to the market because they confirmed that the U.S. economy had been going on the right track of recovery. So, I mean, we have to wait and see.
All right. But what are you most bullish on when it comes to picking up these metals? Is it going to be ferrous or is it going to be the non-ferrous space?
For the time being, all the policies both from the U.S. and China seems very big and very ambitious as well. Like China, people are starting talking about like 45 trillion RMB investment in the infrastructure, whereas the U.S. President Trump always talking about bringing back the job opportunities as well as investing into the infrastructure construction as well. I believe some of the projects will be able to materialize, especially for the U.S. For the past few years, a lot of materials like metals and steel, the prices have been, at low levels. So the projects definitely will be good news to the U.S. economy as well as to the metals and steel. Whereas for China, I believe since last year the prices have been recovering. So I believe for this year will be pretty much remain strong.
So where would you see the maximum demand coming in? Because the supply concerns clearly are in zinc, aluminum, etc. Would you say the factors have been, already discounted, or is it yet to work its way into prices?
I believe some of the news actually already reflected in the prices, like aluminum. Just a couple of days ago, the price actually shot up to the 22 months high. So that shows that the market already digesting the news and also respond to that positive news. But whether the prices will be continue to react to the news will be very much depending on, let's say for China, the aluminum capacity cuts, whether it will be really materialized. If it materializes and is deeper than people expected, then the prices will be further react to that positive news. So for now, I believe, to answer your question, prices actually reflect, if not all, but majority of the news into the price already.
So, Hong Mai, what would you say, the kind of rally that we already have seen in metals and metal stocks, should investors now start investing in dips even at these current prices?
I believe there are already some speculative traders doing so. But at the same time, after the past few days, I believe some traders already kind of readjusting their position and kind of making the decision again to see whether they have too much stocks on hand. Definitely there will be a pause after all this kind of frenzy buying and price surge. It will, depending on what metals you are talking about, especially those metals like aluminum and the copper that is so closely relating to the infrastructure projects, they will be safer than the rest. Steel in China will be safer as well because for now China's infrastructure construction projects rely heavily on steel. So you have to be like case by case. So we can't really say in general.
All right. So just give us a timeline then. The first half of this year is expected to be positive with the kind of news that we are working with. But what's your sense on the second half? Do you see the year closing on a positive note as well?
So far, now we're already more or less at the the end of the first quarter, where the metals and the steel side shows both from the China and the US has been very positive. I believe the first half will be quite positive as well. People will be very patient waiting for the second half to come and to see whether some of the projects will materialize. If it doesn't, then it will be dampening on the enthusiasm. But otherwise, I believe the second half could be good news as well if some projects does kick off.
Well, that really is a wait and watch then. As of now, of course, we are looking at positive returns continuing for metals. Hong Miley, thank you so much for joining us and making us that sense. So still bullish when it comes from S&P Global and Platts on metal sector. Well, we talked about the gold and the metal prices, and let's quickly recap the week that was for many of these other commodities, where you saw the crude oil prices see some pressure while the supply concerns still linger, but the crude oil prices still declined toward 3-week lows. The Russia Feb output has been unchanged at 11.1 million per barrel, while the compliance of OPEC curbs is estimated at 94%. But the other sector, which also has seen some bearishness coming in from, really has been the US government data, which shows a surge in inventories, production and imports as well from various producers. The fact to watch out is that the crude volatility is lowest since 2014. It clearly has been moving in that $5 range for last 4 to 5 months now. To the agri space, and sugar clearly is your winner here, where the Indian output is declined by 18% as compared to the previous year. And if you just look at the state of Maharashtra, the output here has declined by 40%. The drought in South and Western India has hit the output, and the lower output actually has led to strong demand and is pushing the prices higher. You have seen the sugar prices, and the sugar companies actually continue to perform quite positive. Anywhere between 40% to 75% on the higher side is how we've seen sugar companies give you return for this year. Take a look at the rubber prices then, and it has been a good week for that. 2% up in this week and 12% up in this year till time. The prices did hit a high of 161 rupees per kg as well. The domestic prices have been rising because of the rise in global prices and Thailand floods, which have impacted the output. That's taken the prices higher as well. Well, with that, it's a wrap up on this edition of Commodity Champions. Thank you for watching.